How's it going, everyone? Welcome to this extra special episode of the Cashflow Connections podcast. As you know, we recently finished out the year of 2018, and I'm sure all of you are really excited about 2019. And so I wanted to do a quick episode to kind of commemorate some of the things that have happened in 2018 and to talk about 2019 and what my outlook is, as well as some of the goals I have for 2019 from a Cashflow Connections perspective, but also some personal stuff as well. But before we get into all that, first of all, I want to thank you. I cannot thank you enough for your listenership. As I've mentioned many times before, you have put me in a position to be able to create some awesome episodes, some really intriguing conversations with people that I have a lot of respect for, authors that I've read their books many, many times, people who I have just a tremendous amount of respect for in the real estate business, and people that understand the market at an extremely high level. It's helped me so much in terms of my own understanding, and I'm sure that you've gotten a lot out of it as well. And we're really proud of what we've accomplished so far. Of course, we're always hungry for the future, but that's really what I wanted to take a moment and kind of thank you. From a business perspective, I'll just start off by saying we were able to purchase about $45 million worth of commercial real estate in 2018. And the vast majority of that equity was invested from listeners of the program. So that really speaks to the quality of the listeners, the level of sophistication, the level of action that listeners are taking. And it just goes to show you, this is an incredibly interesting time to be a real estate entrepreneur. There are people popping up from out of the woodwork, creating some kind of platform. And I totally understand that. I totally respect that. For someone that's been in the business like myself for more than a decade, I have seen a massive transition. Long story short, there's a tremendous amount of opportunity in the real estate sector, and things are going to get very interesting here in the next 5 years as prices start to correct. It may create a massive opportunity that we're going to be very well positioned for. And you as a listener will be very well positioned to both be careful with your investments that you're making, but also if we have the opportunity to get in a favorable basis, the tone of these cautionary episodes is going to change. Because I'm not a perma bear. I'm extremely excited about what's coming our way and also what the opportunities are that are still currently in place. It's a very interesting time to try to be investing right now. Now, some of the scalability and some of the growth that we have had has allowed us to take on some pretty awesome team members. The business is extremely lean, so I'm extremely cautious about who I work with, but I have a great team member that I really, really rely on a daily basis, which is my assistant, Nicole Olson. And we also have our marketing manager, who is Adam Carswell, that we brought on in 2018 as well. I met Adam, actually. He heard me speak at an event, reached out to me, and then quickly realized that he was really enthusiastic, really passionate, had a great track record of being able to accomplish things he set out to accomplish. And he didn't know a lot about commercial real estate, but he wanted to be in the sector. And I thought, wow, first of all, this reminds me a lot of myself. Back when I got started, I wish that I had had a blueprint of what to learn. So I basically created a mentorship program specifically for him. And if other people wanted to join in, they could, and they ended up doing it. And it was awesome. And that relationship went from someone who took a program that I created to now, they're doing a lot of our social media posts, and Adam is someone that I, get feedback from on navigating certain situations. And we've done a lot of events all over the country, in Los Angeles and Las Vegas. So really excited about that. For this episode, first I wanted to talk about some of my favorite episodes. So if you haven't heard them, make sure to go back. I think my favorite episode of 2018 is the conversation we had with Cameron Harold. This was about work-life balance and morning routines. It's episode 49. Creating a morning routine was absolutely necessary for me towards the end of 2016 when things started to really ramp up. If you haven't done that or haven't listened to that episode, make sure to go and do that, because starting your day on the right foot is probably the most impactful thing you can do if you're not really starting that day on your own terms. This is why it always comes up with some of the most successful people in the world, because it's absolutely critical. Another one that I really liked is episode 53 with Ryan Smith of Elevation Capital. This is called Will Rising Interest Rates and New Development Kill the Self-Storage Market? Now, obviously, you know where I stand on that question, but to look at this objectively, the reason this was important is that obviously we're in a rising interest rate environment, but more importantly, there was some concern with some investors about the development that was taking place in the self-storage market. And there's plenty of reason to be concerned about that if you just simply look at the graph. There was about $500 million of self-storage development in all of 2013. There was about $500 million of self-storage development in June of 2018. So if you just look at that graph, it doesn't paint the whole picture, but at least it's an important conversation to have. I definitely suggest you go back and listen to that, episode 53. A lot of insight in that conversation. I also wanted to give a shout out to Russell Gray, who was our guest in episode 61. We talked about geopolitics, the history of the dollar, and the trade war. To be completely honest with you, I have known Russell for a couple of years now. We've even gotten on the phone a couple of times, but I didn't at all understand that he understood the world of geopolitics to the level that he does. I think he tries to underplay his background, tries to underplay his bio, and so he tries to keep that close to the vest. And then you hear him talk, and you're like, oh my gosh, dude, how are we not best friends? And so, well, now we are, of course. So go and listen to episode 61. A lot of really fascinating insights, especially about the dollar. It's the underlying currency of pretty much every transaction that you and I deal with, so it's important to understand. And of course, well, I'll put it this way. I read the book Corruption of Capitalism in 2010 and was really turned on by the author, Richard Duncan. Fast forward 8 years, now because of you guys, I have a platform in which I can reach out to that same author and say, dude, loved your book, really would love to have you on and be a guest. And, I know he's a former IMF consultant. So to be able to have a conversation about that and to talk about where we should focus our efforts and whether or not government should be involved in spending, and if they are going to be involved in where should we focus that money, really interesting conversation, very dense. It's about an hour long. Overall, I have frequently gotten emails from people that basically say, if you can afford to have this person speak, you should definitely get them on your show. And that's because the level of content is so high and the caliber of guests are so high that people assume that I pay people to do this. I do not. Again, because of you guys, I have the ability to reach out directly to some of these individuals, and they're happy to come on because the platform is large enough. It's a good use of their time. And I like to think of myself as a good host, the type of host that is respectful, but also asks intriguing questions that are going to get to the bottom of what's going on. And I think a lot of people, the right people, enjoy that. I will say that there are a lot of people out there that have not come on the program, and I think that it's because they're concerned that the questions I might ask may lead us down an uncomfortable road, and they're probably right. But I will say kudos to the people that do come on, and hopefully I'm navigating some of those interesting situations good or well enough, because when it comes to money, there's obviously a lot of really weird things that can happen. So let's talk about goal setting and kind of commemorating some things. So I think as a lot of the people that listen to this show are entrepreneurs, or at least have some kind of entrepreneur mentality. If you're managing your own money, I consider you to have that entrepreneur gene or whatever. You're pursuing that part of your brain. You're the master of your own future, right? At least when it comes to your own money. And I know that myself, I have often gotten caught constantly thinking about the future and what I need to do. And I'm only 3 months away from accomplishing something significant. And that is definitely something that's necessary in the beginning. You need to be hungry. And sometimes you feel like if you don't have that hunger, that you're not constantly starving, that you're going to lose your edge. And I respect that. However, it depends on your personality type, but there's a certain point where that actually becomes extremely burdensome. And you have to take a moment to commemorate yourself and some of the achievements that you've made in the past. And I'm not talking about latching on to those achievements and saying that because you accomplished that you're good to go for the rest of your life. But it's good to stop and think and say, look how far I've come, in order to really give yourself the confidence that you can accomplish things that you're setting out to do in the future, because those things that you're setting out to do in the future should be very challenging and should be somewhat intimidating. If you're not putting yourself in those positions, you're leaving money on the table for sure. So I'll tell you, when I write down the goals that I have for myself for the following year, after I go through and do some affirmations and talk about what I'm going to accomplish, before I move on with my day, I write something that I'm really excited about, something that happened the previous year. So in 2018, just to name a couple of things, I'm really excited that the Intelligent Investors Real Estate Conference was an overwhelming success. In my opinion and the opinion of the people that attended, I am so glad. If you flew to see that conference, first of all, thank you. And also, I'm confident that you had a great time. If you haven't done that, or if you haven't talked to someone that went, they will, in no uncertain terms, tell you that we kicked its butt. It was awesome, which means that we're definitely going to do it again next year, which I'm extremely excited about. So Intelligent Investors Real Estate Conference was awesome. I also deadlifted 415 pounds at 158 pounds body weight. That was pretty cool. I didn't really train for that, but I was excited to pull a new PR without really focusing on strength specifically. That was awesome. I mentioned we added 2 new team members, my assistant and our marketing manager. I also got engaged. That was cool. And we've also had just a tremendous amount of momentum with Carswell Connections. It's clear that this is what I'm going to be doing for the rest of my life. This is my unique ability. I'm having an absolute blast. One of the things that I'm looking forward to accomplishing in 2019 is, actually, I should back up a bit. So I ran at a fairly competitive level in high school, middle distance and cross country. And just to kind of put some numbers on it, I had a 1440 mile time and a 1643 mile time in a cross country meet, a hilly course. So that's definitely getting up into that competitive range, not quite into the no holds barred ultimate elite running range, but definitely, had the opportunity to run at a D2 college, D3 college, and maybe a college that, wasn't an ultra competitive cross country college if it was Division I. Long story short, I spent a lot of my high school career extremely focused on running. That was pretty much all I cared about. And I was always feeling like I was just one race away from getting into that very elite range. So for elite range, I would say, 425 for the mile, 16:15 for a 3-mile race. And I was training for that and was able to hit numbers in practice that would suggest that I would be around that range. But I never had the race to commemorate that or to finalize that. Long story short, when I look back on it, I am extremely proud of the work I put in. I could not have been more focused. A lot of people, when they look back on their high school athletics, they think, man, if I could just done this. Not me. Not me. I mean, I could have put in more miles maybe. My coach was really conservative about overtraining people, but I was right at the brink of what my genetic levels were capable of at that time. So anyway, I have been talking about those times for quite some time, but it's been like 12 or 15 years since I've run those times. And so I realized, I'm getting closer to kind of the end of the peak of where I could be in the athletics, at least in those distance levels. I'm thinking, man, I kind of want to run that back. Now, I'm not willing to set the standard of beating all those times because it would take a level of sacrificing other things of athletics. I mean, I mentioned earlier the deadlift at 415. I don't think that would be happening if I was really focusing exclusively on running, and I really like lifting heavy. But I did set a goal of going under 5-minute mile in 2019. And that's something I've been working for now for about 2 months. Man, it is way faster than I thought it was, that's for sure. I thought I could just kind of punch it through without really doing any long distance running. Nope. So I'm going to work on that. I'm giving myself an end of February. I think I can do it. The last time trial I did was at the 526 range. If you follow running, you know that there is a lifetime of difference between 526 and 5 flat. But because I've done it before, I know I'm capable of it. I do think I'll do it. It's just, I will do it. It's just a matter of, I didn't know how much I was going to have to focus exclusively on running. So that brings me to my next point, which is that because of this goal that I've set out to do, my perspective on running is very different now. Man, I was just so upset if I wasn't going to hit my times because the implications were so significant. I'm not going to get to go to college to run and things like that. But also, now in life, I don't take anything like that for granted. I mean, where else can you have that type of complete depression if you're beating yourself up running around a track? And this is something that happened a couple of weeks ago. My fiance and I went out to a track in San Francisco to do some 800-meter repeats. And I was kind of thinking that I was in that 5:10 mile pace range and was able to complete 4 800s at that pace with a 3-minute rest in between. Well, the first one went fine. The second one was not so fine. And the third one was a complete catastrophe. And I really wanted to quit because what's the point of running around at like 50 seconds off your pace if you're supposed to be doing a quote speed workout. So I ended up wanting to quit, which I've never felt during a speed workout before. Those are supposed to be fun. Anyway, my fiance was like, you can't quit. Like, what kind of example are you setting? So I did finish it. It was one of the most challenging decisions to make in my athletic career. I just could not find any motivation for it. If she wasn't there, I wouldn't have done it. Long story short, as soon as that was over, I was so happy. I mean, yeah, sure, getting over that adversity and running around the track again at a slow pace that was kind of depressing felt good and feels good to overcome that. But more than anything, there was this moment of just complete emotional collapse that I experienced because I realized how far away I was from where I thought I should be at that point in the training cycle. And oh my gosh, as soon as I felt it, I just completely embraced it. I was just like, man, where else can I feel like this? It's very challenging to find yourself in a position like that doesn't have something to do with an overwhelmingly negative implication for the rest of your life. So in the sense of, for me to get to that emotional level of distress, it would usually require something pretty catastrophic to happen. But with athletic training, especially distance training, where you're completely maxing out your heart rate and going beyond your VO2 max, you're putting yourself in a life or death situation. Where else can you have fun like that? So if you haven't done some kind of explicit cardio in a long time, I completely suggest it. Whether it's on a rowing machine or an assault bike or just getting out and doing a nice long run, I've noticed that the distance has come a lot easier. I did 8 miles at a 7:18 pace recently on a moderate day. And that was something that, I would have felt really good about that if I was training consistently. With the age comes that distance. So long story short, if you're out there alone, and by the way, if you do this cardio, I really suggest doing it without music, because a lot of people want to check out when they do these types of workouts, as if they're just they're going to sit on the bike and they're going to spin the things, but they're not going to be locked in. No, you don't want to check out. This is like the highlight of your day. You want to be hyper focused. Plus, it's basically like you're driving an airplane. You want to be memorizing and being familiar with your heart rate. You can hear your breath. You can hear your steps. You can hear the cycles of the assault bike or the rowing machine. All that stuff is not the kind of thing that you want to be avoiding. You want to be in that moment. So hopefully that was interesting to some of you. That's kind of how I think about long distance training. It's not something you want to avoid. So I will keep you guys posted in terms of whether or not I'm able to accomplish that 5-minute mile. Like I said, I'm very confident I'm going to do it. I just was surprised at how much sacrifice it's going to take in terms of I can't be lifting heavy weights and then go run a 40-minute tempo run. It's too challenging, especially if you're doing sets of 4 and 5 like I like to do on squat and deadlift. But I'll keep you posted because this is something I am going to accomplish. Now, in terms of other things in 2019, other than distance running, number one, as you know, it's very challenging to find opportunities right now. I am extremely bullish on our current fund. Part of this is because I love the recession-resistant component. I love the size of the fund. We're likely going to have somewhere between 30 and 40 assets in the fund. So if you invest $100,000, you're talking about $3,300 per asset. So where else can you get that kind of diversification? I also really love the quality of the sponsor. Ryan Smith, who, like I mentioned, he's in episode 53. This is someone who I have a lot of respect for. I have had the opportunity to interview and interact with hundreds of sponsors throughout my career. The show has also helped that a lot. Ryan is really, really up there in the highest caliber. And that's the reason we decided to partner together. I mean, I have a tremendous amount of respect for him. His depth of knowledge of the sector is incredible. So to be able to make a bet on a very large player like them, he's been responsible for the acquisitions of, the 5th largest mobile home park portfolio in the United States. So there's that. I also, a lot of people talk about protection of principal right now as if that's the most important thing. And I agree that it is the most important thing. But the really important question that you should follow up with when someone says that is, what do the debt terms look like? Because the debt is going to dictate whether or not that principal is protected. And I know that you guys have heard me repeat this over and over again, but that is absolutely key. So we underwrote our fund to have an average loan to value of about 65%, which I think is reasonably conservative and pretty much below this industry standard, right around, a conservative look at loan to values. The current fund average is about 58% loan to value. And that doesn't include the tremendous amount of value that we've added to a lot of properties. One of the properties we took from 76% occupied to 89% occupied. The fund has a very small investment in a development that was ground up. So we bought the property, it was a piece of land. Now the property is 50% occupied. So that 58% loan to value isn't even factored in. So a very conservative loan to value. Now, of course, loan to value doesn't paint the whole picture, but it's definitely a very good insight. To give you an idea, I'm really excited about maxing out the size of that fund, at least based on the conversations we've had with the sponsor. We currently have about 12.5 million funded, and I would really like to get that up to 15 million so we can max that out. The sponsor is able to give us very favorable terms for our investors as opposed to those that go direct. And so our money is a little bit more expensive. So they said no more than 15 million. So we want to get to 15 million. We currently have about 183 investments, and the average investment size is about $85,000. So if you're interested in investing, by the way, go to cashflowconnections.com, create an account. You'll have access to the fund immediately. You know, from a big picture perspective from Cashflow Connections, I would really like to hit an additional 260 investors in 2018 and raise an additional $26 million. And these are for investment opportunities that I believe in. And so every morning when I write down my goals for the year, that's exactly what I write. Add 260 investors and raise $26 million for investment opportunities that I believe in. Now, that last part is really critical because when you start to set goals like that, sometimes if your incentives are not properly aligned, you start to have a really bad situation where all you're focusing on is raising money. Well, in order to combat that, and in my opinion, completely eliminate that risk, the compensation structure to Cashflow Connections is overwhelmingly based on performance above a preferred return over a multi-year period. So if we are not able to achieve the goals we set out to achieve from a return profile, we may be working for free unless the deals pan out as we expect they will. So we're deferring our compensation until investors are able to achieve that preferred return. So because of that, I am extremely skeptical about who I work with and the types of opportunities we invest in. This is why we basically put out 3 deals in 2018. Probably will put out another 3 or so in 2019. Another goal I have for 2019 is to produce 52 amazing podcast episodes with guests that I have a lot of respect for, that I look up for, people that are experts in the field, authors that I've really listened to their books for a long time and things like that. And again, thank you for allowing me to do that. I am stoked to be able to put that type of content out. Also, from a personal standpoint, I obviously want to get married. We set the date of June 22nd, so that is what I am looking forward to. And another thing I want to do is have an absolutely amazing conference. And this is the same kind of thing. You know, I want the attendees to be extremely impressed. I want the level of speakers to be unbelievable. I want it to be extremely high caliber. And I want to also be able to give a keynote presentation that stands in the same category as those speakers. And I think that, well, based on the feedback, we were able to accomplish that this year. And, you know, I look forward to continuing to impress the people that are coming back and to really blow it out of the water for people that haven't been to the conference yet. Of course, I want to meet more and more of our investors. So if you haven't reached out to me and you're an investor, or if you're considering investing, you know, don't hesitate to shoot me an email at info@cashflowconnections.com. I truly love the caliber of the people that listen to this program is overwhelming. I mean, look, I'll be honest with you. There are many people in the industry that do not think it's wise to have an extremely educated investor base. You can imagine a situation where it can be kind of a pain in everyone's butt to have an investor base that knows a lot about investing. Well, that's very valid, and I have felt that in my career. However, it doesn't matter to me because I really like educating people, and I like working with people that are extremely educated. I like having conversations with people that are way above any kind of category of, you know, the standard median of whatever they do. I like people that push the envelope, that learn things, that have different perspectives. And I have met so many people as a result of this show that are in that caliber. And so, you know, I want to do more of that. So if we haven't gotten connected yet, make sure to shoot me an email. Obviously, my schedule fills up very quickly, but always happy to correspond over email and schedule a call if it makes sense for both of us. So again, thank you so much for taking a listen to this interesting rant on 2018. And I hope you guys have an absolute excellent 2019. All right. Have a great day.